Okay, let's get started. We don't have as much time today as we normally do. 50-minute class, instead of an hour and 15, it's 25 minutes long. Sign-in sheet when it comes around. I appreciate y'all being here on a cold morning. It's easy to stay at home for it's warm, I guess. I talked to sister in Detroit on my way up here this morning, and I think they got about 15 below with a wind chill about 30 below. Talked to a sister in Nebraska, they got about the same thing. Wind chill and cold weather, so we don't have it that bad. We just been down to about 4, 5, 6. Anybody have the minus this morning? Anybody have a minus? Okay, so we're one. All right. But I think this cold weather out in the Midwest, right, time I looked at it, it was about 6 on the 10. Weather's raining. One man, I guess, on the way, and then it's frozen there. So cool, so, and all. All right, so let's get started with chapter 12. Now, chapter 12, about sin gauge. How many have finished chapter 12 sin gauge? Does Alexandra? Jessica, anybody else? We got 2 finished?
I'm halfway done.
Halfway? All right,
I'm about 44%, or 55%.
You need to be always done by Tuesday. Okay, so that's coming. Now, if we want to have a test on 2 chapters, we've got to have it soon. Soon is next week. Now, we can finish chapter 12 today. Now, we can actually have the test Tuesday, or I can put it off the next Thursday. So, I heard a lot of Thursday. Who says Thursday? Who says Tuesday? Okay, who says today? Oh, okay. Carl's asking class, I'll take a test real quick for you. You got any free time today? I know you're kidding. All right. So next Thursday we'll have to finish. Tuesday we'll finish chapter 12. We'll review a little bit. I'll tell you what problems will be on the test. Tuesday. How many multiple choice? But probably 10 multiple choice, 4 or 5 problems. Now you know you'll have all kinds of problems on partnership, splitting income, partnership, or amending a partner, or liquidation. And you know back in chapter 11, get it close in chapter 11.
What was it in?
What was the topic?
Journal entries. Journal entries. Payroll.
Payroll and notes. All right, notes with interest rate, doing discount for notes, and that's the payroll and all those liabilities, with warranty, liability, pension plans, liability, vacation pay liability, and so on. So we'll look at this Tuesday, and I'll tell you exactly how the forms on the test. You know you'll be making, calculate payroll, and you know you'll be making two main entries. One on the employer for wages for the employees, and the other one on the employer for employer tax. So you'll have those two. Okay, and Cengage over the weekend will help you, hopefully learn more about chapter 12. And you need to go ahead and read chapter 13. I'll have to start chapter 13 on corporations come Tuesday, okay? Hopefully we don't miss any more time or any more days. Now, I gave you 3 or 4 problems today we need to look at and review and discuss, or whatever we need to do with them. Was that 1A problem? Was it 1A? All right. Now, looking at that problem, we have Eric and Renee. They form a partnership. Renee, she's going to invest 23.4 in cash, inventory of 62. Wallace invests certain business assets. Now, the appraised value of these assets, Wallace puts in accounts receivable at 19.9. We think we can collect 19.5. His allowance was 12, but we're going to put that up to 14. His equipment was 83,000 with accumulated depreciation 29, but we're going to value that at 55.4. And accounts payable 15 is still 15. Notes payable of 37.5 is still 37.5. Things like notes are at their face. Cash is face value, but other things are appraised value. Now, how would you get these things appraised? You'd have to get somebody to appraise that equipment that's in that type of business. All right, instructions. Journalize the entry to record the investment of Keene and Wallace in the partnership. Now, you can make 2 entries, or you can make 1 entry. Okay, Kelly, what is your entry for number 1?
Cash debit for 23,400, merchandise inventory debit for 62,600, and Eric Key capital credited for 86,000.
All right. A lot of exercise in this chapter. You're welcome to work all of them if you want. All right, now here's the entry that she gave me, I think. Did you combine that, Kelly?
Yeah, I didn't tell you the rest of it.
So
That's what I have.
You combined it or you have this?
Well, I had that.
Okay. All right. We put in Eric's cash and inventory and credit is capital. And we put in cash here, accounts receivable, equipment, credit to allowance, credit to payable, and of course, notes payable of 37.5, and his capital is it's cut off. How much is it?
60,000.
All right, his capital here should have been 60,000 even. The Prairie balance sheet as of March the 1st, the date of formation of the partnership of Keene Wallace. Well, right here's your items for your balance sheet. You combine the cash, you got inventory, then you got accounts receivable, then you got equipment, and you've got a contra account minus from accounts receivable, then you've got your 2 payables, and then you got capital. That's your balance sheet. Assets is equal liabilities plus owner's equity. All right, cash, accounts receivable minus the allowance, inventory, current assets, property, plant, and equipment, 198.5, 2 liabilities, 52.5, 2 capitals, 146. All right. Alexander, do you have that balance sheet? You're missing somewhere, just taking it to.
I just did it too.
Okay, truthful. All right, William, you have it? Who does have that balance sheet? Just two people? All right, who worked that problem? Just two people? Serious? All right, that's the problem I will take up for bonus on your team. So, it's only two people, I don't need to take it up, so instead 5 points on your team. All right, now, if I do these other three problems the same way, these two young ladies, if you got all four problems, if I gave 5 points for every problem, they're gonna have 20 points on the team. I'm not gonna do that, but if I did. Jessica, you didn't do these?
I'm taking 18 hours. I had an insane rate.
All right, hush, Jessica. Is anybody else, is anybody taking 21 hours? Anybody else taking 18?
Absolutely.
A whole bunch of people taking 18. How many hours you work, Jessica?
No.
How many? 0. All right. Margot, are you taking 18 hours?
I'm taking 18.
But you're working how many?
I work 4 days a week.
Who else is taking 18 hours? All right. Are you all working?
In school.
But you're still working 20 hours a week? 18 hours plus 20. In a normal place, Jessica, I would find somebody taking 21 hours, working 40 hours a week with 2 kids at home and driving 60 miles. And that'd be worse if you had to look.
Yeah.
Okay. We can always find somebody that's got it rougher. And so, anyhow. All right, let's continue. After adjustments on February, at the end of the first full year, the revenues was 300,000, expenses was 230. Well, that means they made 70. All right, the drawing accounts have debit balances of 19 and 24. What does 19 and 24 add up to be? 43, well, out of that 70,000, they've already taken out 43. Journalize the entry to close the revenue expense account and the drawing accounts on February. Now, they say how they split profits and losses. The partnership agreement includes the following provisions regarding the division of net income: interest on original investment of 10, salary allowances of 19 and 24, which they've already taken out, and the remainder equally. Okay, all of you take a minute and calculate that. Here's their capital, they get 10% of it, and they get a salary. You divide the remainder equally, and well, 70,000. 70,000, give them interest, give them salary, split the difference equal. Take 1 minute to try to calculate that. Trying to find somebody.
A lot of people.
Yeah, a lot of people test.
Oh, yeah.
Yeah, those are.
It just takes me a long time to write essays.
All right, you should have an answer by now, in case I didn't disturb you. All right, of course, this was their drawing, but here, if I take, you split that up, 70,000, you gave King capital, King 19. Plus you gave King, is it 10%, 8,600? Was it 8,600? All right, then you gave Wallace 24,000, and then 10% of 60,000, 6,000. That's how you break it up, and the difference equal. It doesn't matter how much they took out in drawing. But here we debit revenue, we credit expenses, we credit capital. That is one closing entry, and then we debit their capitals and credit their drawing, and that's two closing entries. And here's how we would have broke up those salaries. And I've always wanted you to add it up horizontal and vertical and get 70,000. That's what you had to give out. So that's just a review on starting a partnership and splitting income. There's two of the 5 concepts in the chapter. The next problem was what, number 3?
2. Number
2. All right. Dividing partnership income. All right. They decided to form a partnership. They have agreed that, let's see, one, I guess Morrison is to invest 150,000 and Green is to invest 50. Morrison is to devote 1/2 time to the business and Green is to devote full time. The following plans for the division of income are being considered. All right, now, how much income did they have? For each plan, determine the division of net income under each of the following situations. They have net income of 115, then they have net income of 200. They give you a little chart to go by. All right. Now, how would you split that 115 for a part? How about that one, Cole? How do you split 115 for a part of number 2? What'd you get?
I'm Jacob.
Jacob.
I thought you were talking to somebody else.
Cole is absent today. Yeah. Anybody, how do you split that?
57,500.
How much?
57,500.
57.5.
Yeah.
Yeah,
Sorry,
a piece.
I thought you were talking to
That's
somebody.
okay. I got you wrong there. Okay. All right. Now, how about the 200,000? Kendrick, how you split that for a part?
For 8 parts?
Yeah.
25,000.
No, wait a minute now. Are you with us? 200,000 is income, right?
Mhm.
Okay, a part says equal division. How do you split 200,000 with 2 people?
Oh, 100,000 each.
Yeah, I thought you were going to use your calculator. All right, 100,000 apiece. We didn't communicate there or something. Now, let's look at number B, in the ratio of original investment. All right, what is their original investment ratio? 150 to 50 is what kind of ratio? 3 to 1, which is what percent?
75.
And 25? Same decimals. And what fractions? 3/4 and 1/4. Okay. All right. Let me look at these real quick. Well, I guess that's plan A. And this is plan B if I get there.
Yeah.
Plan B, if we worked it out, 86, 28, 150, and 50. All right, we know this is 3/4 and this is 1/4, or 75% and 25. Now C part I've already got up there, but how they say to break it? And the ratio of time devoted to the business. What is the ratio of time devoted to the business? Evan?
Is it 2 to 1? One doing it full time, the other doing
Is it 2 to 1 or 1 to 2?
1 to 2.
1 to 2? Same thing, Evan, but you gotta get the partners right on that. So half-time is 20 hours and full-time, let's say, is 40 hours, and that's 20 to 40, or that's 2 to 4, or that's 1 to 2. All right, and this is, I guess, 1/3 and 2/3. And this is 1/3 and 2/3. Okay, now moving on down to D part, interest of 6 and remainder equally. That's easy enough. So we're going to, I want everybody to do E, take a minute and do E for both levels of income. I'll show you D in a minute. Take a minute and everybody work together if you need to. Say if we're on problem 2 at the end of chapter 12. Who did that sign-in sheet get to? Right here. Go ahead and sign this. Okay, Dylan, what is your answer for the first salary? For one partner, how much for the other partner? All right, Carlos, do you have the 200,000? How do they split it? Do you have the 200,000? How do they split it? Okay, Arthur, did you get it? All right, Eva? No? Robert? William? What'd you get?
I got 88,000 and 112,000.
All right. Folks, this is E part. 45.5 and 69.5 was correct. That's what Dylan gave us. And after going through a dozen people, William said it was 88,112. All right. You got to be able to calculate that, folks. Okay. And you can do it. It's an easy concept. All right. Now, the last one here, F is Plan E, except that Green is also to be allowed a bonus equal to 20% of the amount by which net income exceeds the total salary allowance. All right, let's take the 200,000. Now, what were the salary allowances?
70 or 40.
The salary allowances were how much?
40,000 and 70,000.
They didn't get that much salary. Are you sure 40 and 70? Trying to look at that again, you know? 40 and 70 adds up to how much?
37,000.
All right, subtract that from 200. That leaves how much? 90. And you're going to give one partner a 20% bonus there. What's 20% of 90? 18. Now, 18 from 90 just leaves how much? 62? 72? All right. And then you got to give them interest on their investment and split the difference, I guess, equal. But now you can follow these patterns. So I'm not going to labor on with splitting income. So hopefully you review those. What they do here, just put the answers down. Let's see.
That's how they worked it out.
Yeah. Let's get down to F, I guess. Interest allowance. All right. Salary allowance. Bonus. Was that bonus only 1,000? Well, it's 18,000, I guess. We calculated something wrong. I did take something out. And then it says is 1 to 1 or equal. Main and income goes to Morrison. So if you can work out E and F, you can do any of these. Okay? We'll work one together Tuesday, E and F. All right, you had a couple other problems today, and you had 1 and 2 and what? 4? Is 4 the next one? And 6, correct? All right, admitting a new partner and 6 is a liquidation. So we're trying to cover all the topics in the exercises, in the problems on Cengage, and then you'll be ready for a test, hopefully. All right. I know all of you like A's, so I challenge you to make an A on this first test. Okay. I'm going to count Cengage as a test grade. I'm just going to count it as a test grade. So most of you should have a 90, 95, or 98, or maybe even 100 at end as a test grade. Okay. So Cengage is important. All right, let's look at number 4 real quick and number 5 real quick. But I'll tell you what I'm going to do. There's only 2 people here that's got those 2 problems. Sage, did you have all these problems? There's still only 2 people who have all these problems. All right. Okay. I'm not going to go over these 2 points today. I want you to have by 2. I want all of you to have these 2 problems by 2. So I'm going to step on into the next chapter, which is corporation. So I'll switch a half an hour today for Tuesday, okay? There's no need to just go over these just to be going over them if you haven't tried them or don't have any questions. All right, we're going to look at corporations for the next 15 minutes. Let me bring up a PowerPoint real quick. And we'll deal with this chapter a little bit. One thing about this chapter, it will not confuse you on chapter 11 and 12. There's no similarities, just nothing the same. All right? Now, the first thing about a corporation, corporations employ more people in this country. They have more revenue, more sales. The top 10 corporations in this country actually could bankrupt this whole country. They're that big. And some of the biggest corporations, how about retailing? What's the biggest corporation? It is Walmart. And it's pretty much worldwide. Walmart. All right. How about in the software industry?
Microsoft.
I'm in Microsoft. How about the hardware industry? I don't know if it's HP or Apple. I think it's Apple because HP didn't come along with all the iPhones and so forth and the watches. It may be Apple. That's hardware. How about the biggest, probably car company? Chevrolet. All right. How about the biggest oil company, corporation?
Shell. Would it be Shell?
Exxon. It would be Exxon. But now, computers, I may have told you before, computers have changed our language, haven't they? Windows used to be something when I was in junior high, I would say, what we got the windows, what the females go by. So we had for lunch hour. A chip was something we found down in a cow patches. Well, now we know what a chip is, don't we? Hardware is something we bought at a hardware store, and software is something ladies wore to bed at night. So, computers have changed our language. Any other terms in there?
That I can think of.
Think of? And it changed. Byte, B-Y-T-E. so forth, but there's other computer terminology. All right, but here is a legal entity. A legal entity can be sued. McDonald's was sued for hot coffee. And also, McDonald's was sued because their burgers and fries make people gain weight. Cigarette companies were sued because people got cancer. Car companies were sued because I know Ford had a car one time called a Pinto. I haven't seen one around in a long time, but it got hit in the rear end and it exploded. And they got sued. Firestone, a tire company, got sued for the tires going out. What heck? A corporation can be sued as an individual. They are a legal entity, just like a proprietorship is a legal entity. And but the proprietor is responsible. A partnership is not such a legal entity. It is the partners you have to sue. All right, now, characteristics of a corporation. We've got publicly held corporations and privately held. Now, here is one thing about a corporation, limited liability. You can only lose what you have invested. All right, the stockholders control a corporation by electing the board of directors, and they elect a CEO. Some of these CEOs make $10 million a year. And they all have accounting backgrounds, by the way. Okay. All right, so the organizational chart, which you find out in management, stockholders, board of directors, officers, and employees. As a separate legal entity is subject to taxes, corporations pay taxes. Does anybody know the tax rate? It was all over the news a few months ago when a tax bill passed. Corporation taxes was about 35 to 39%. Now they're 21%. So no matter what a corporation pays in taxes, more taxes they pay, they add it on to the price of the goods, which you're paying for taxes anyhow. All right. Some advantages of a corporation: separate legal entity. It has continuity of life. If one stockholder dies, it goes on. They can raise a lot of capital. Ownership rights can be transferred, and it has limited liability. All right. I've incorporated quite a few people I do their taxes for to give them that limited liability. Okay. Now, any of y'all only share a stock in a corporation? If you work at Walmart, you'd have a few shares of stock, I guess, in Walmart. Stock has made people rich. Do you have any man in mind that stock made them rich? It's in the news a lot. Warren Buffett. He became billionaires in the stock market. All right. Who started Microsoft? Bill Gates. When he worked with Microsoft, he gave himself lots of shares for 1/10 of a penny a share. So if you can buy a share of stock for 1/10 of a penny, how many shares can you buy for $1? 1,000. All right. So he has 1,000 shares for $1. Those 1,000 shares that went up to over $100. So that $1 multiply 1,000 times 100. How much is that? 100,000. So that $1 for Bill Gates. That's why he's a billionaire. And the stock made it forward. It's on paper unless he sells it for that. It's on paper. All right, now some disadvantages. The owner is a separate form. Stockholders control management through a board of directors. All right, double taxation. Double taxation, if the corporation makes money, they pay you a dividend, and then that dividend is taxable to you. That's where the double comes in. The corporation tax, then the stockholders are taxed on dividend. Corporations have a whole lot of regulatory costs. All right? But this one is an important one here. Owner is separate from the management. And, you know, if you were a shoplifter, you'd hate to go down on the corner and steal from some little corner zip-in market where you know the owners. But if you go to Walmart, you don't know the owners. If you're a shoplifter, it don't hurt you or you don't have a conscience when you shoplift from Walmart. Okay? Did anybody ever hear a song that Johnny Cash? How many of you have heard of Johnny Cash? Okay, you heard of Johnny Cash. All right, did you ever hear a song that he made about building his Cadillac? He worked at General Motors, and he shoplifted enough parts to take home, I guess in his lunchbox and everything else, to build him a 58, 59, 60, 61 Cadillac by stealing parts. All right, he was stealing from a corporation. It's just a song, okay? All right. Examples of corporations and their states. Caterpillar is stationed in Illinois, John Deere, Illinois, Delta Airlines, Georgia, GE, Connecticut, Home Depot, Georgia, Kellogg Companies, Michigan, R.J. Reynolds, North Carolina, Starbucks, Seattle, 3M, St. Paul, Walt Disney is California, and Whirlpool is Michigan. Now, Starbucks Corporation. Do you watch the news? What's their CEO saying? Don't watch the news. All right. I know authors don't have time to watch the news and work study and his classes and eat. All right. Okay. The CEO of Starbucks is going to run for president as an independent. And he tells about his rags to riches story. He grew up in a project. I guess it was not wealthy, but it wasn't totally poor, but he was poor. And he became a billionaire because he sold coffee. How many of y'all drink Starbucks? No, Margo used to drink a cup every morning. What happened to your Starbucks coffee, Margo?
Where I moved, it's not the same way.
Not convenient?
No.
All right, so we've got some big corporations. And here are some of the big ones, but they're probably not even in the top 10. You know, 3 automobile companies will be in the top 10. You got certain costs in a corporation. Now, if you have cost in forming a corporation, you can debit organizational expenses and credit cash. All right. I've had a proprietorship, still doing, preparing taxes. I've been in 3 partnerships. 4. One was accounting practice, and 1 was a tax practice, and 2 used car lots. So I've been in 4 partnerships. The worst kind you can go in. I've formed 1 corporation with a couple of colleagues. And what we did, we were
taking things in on consignment and sell them. And we also bought some unfinished furniture. We were gonna sell unfinished furniture. Our first day advertisement was come in and see our naked furniture. All right? Because it was unfinished. All right? But anyway, so we franchised it out. And we got 1 or 2 franchises started. And I don't know, all of us got busy with other things, and we closed the corporation down. But these organizations are expensive. The lawyer did it for free to organize us for some shares of stock. Sometimes you trade stock for that organizational expense. All right. Stockholders' equity will be your new term for capital. Okay, it will now be assets is equal to liabilities plus stockholders' equity. Not capital anymore, not owner's equity anymore, but stockholders' equity. Sources of stockholders' equity. Retained earnings is income. Stockholders can invest. And of course, paid in capital when you sell stock for more than what you offer it for. Corporations pay dividends to their owners. Net income will increase retained earnings. All right, dividends will decrease retained earnings. There's a credit balance normally, but always really. All right, I believe this is, of course, we're going to be able to get today. We'll pick this back up Tuesday after we finish chapter 12. Be getting everything caught up to date. Cengage chapter 12, study for a test a week from the day. And hopefully it's not a snow day, so you'll have more time for that test. Okay, have a good weekend and stay warm.